Hey everybody, it's another beautiful day in the neighborhood. Welcome to this week's edition of Wall Street Winners, where we bring you the unique but truthful underpinnings of the market. And this disclaimer is incredible. Now, S&P, let's take a look. So first of all, notice that the purple predictor, the purple line, is getting more bullish. Notice that the rally over the last week is stronger than the previous rally that we had in early September. Notice that this rally also had a gap in it. Those are three reasons for getting more bullish on the market. Now, none of them are conclusive, and we're certainly not making higher highs and higher lows. So at this moment, it's still a bear market, but some signs of strength in the S&P. Over here in the Dow, not much really going on. Everything is very equal. NASDAQ, purple predictor, remains bullish. And here, the price action did break above the highs that we made in early September, just by a smidgen. And on Friday, it was spanked down lower. So once again, kind of more signs of bullishness, but not bullish. Seasonality. Let me stop here because we're finally going to maybe have some action here. Up at the top, this is our stock market bullishness, and we are now in our bullish period. But that doesn't mean that we want to count the market as bullish. You see, we need to have the market going up in a period of bullishness before our stock market indicator turns bullish. So as you can see, I've put a red line up at the top, and a break above that red line would turn me seasonally bullish. We're heading in that direction, but once again, we're not making higher highs yet. So that still remains to be seen whether or not we're going to actually get to a seasonally bullish period. Now, utilities down at the bottom, we're near the end of our seasonal bullish period, but notice the very brisk price action that's occurred in the last week, and the purple predictor starting to catch up to price action. So same thing here. If we break above that red line, I want to buy utility stocks. Now, we are still a month to go before the end of the bullish seasonal period, but remember that if we go into November and we're still in a bull market, we'll still count it as bullish. So I'm buying utilities at around 61.50 here on the XLU. And the XLU is an ETF which mimics utility stocks. Stock Traders Almanac says this is about a neutral week. So, okay, neutral, fine. Nothing going on with the yield curve. Still think it's being manipulated by the Fed. Asset allocation slightly moving in favor of bonds as people try to reduce their risk by buying bonds rather than stocks. But then when we come over here and look at our risk indicator, it's ever so slightly bullish. So they kind of offset each other. One's a little bearish, one's a little bullish. Global shares doing okay. Bonds, you can see that they gapped down early in the week, and we'll get to our indicators here in a second, but let me repeat, all of our indicators are saying that bonds should move lower, interest rates should move higher. Now, just because all the indicators are bearish doesn't mean that it'll go down, because if the Fed is manipulating the price action here, they can stand a lot of pressure. Eventually, the market always wins, but that could be months. So I like being on the short side here in bonds, but I'm not looking for a whole lot near term. Bond key factors, all of them are bearish bonds, all of them. Dollar, really, we rallied off of the lows, and I don't know, I'm just not excited about the dollar. All right, gold started to rally up a little bit here as the dollar went down, but this is not a bull market. This is a bear market in gold, and so you shouldn't be long gold at all. If you're long gold, get out of it. You can always buy it back when we get into a bull market, But other than that, why should you own gold? Oh, but Courtney, there could be a catastrophe and I want some insurance. That's a useless. You can't you can't exchange bars of gold in a crisis. Trust me. You got a 100-ounce bar of gold, that's a pile of rock until the economy gets back to more normal and people will actually have cash to buy something that expensive. If you're worried about a crisis, buy quarters, buy bags of silver quarters and dimes. People recognize them, they're small, they're sellable, whereas bars of gold are useless. Okay, our gold key indicators, a little bit bullish, they're kind of mixed bags, all of them. Crude oil, very interesting. We got some weakness there, and we're back into the 30s. Now, if we're in the 30s, what's happening is that the demand for oil is decreasing. Supply slightly increasing, but still low. We had the agreement to cut 10% of global production, which is a huge amount. But I think that demand is down even more and sliding a little bit lower all the time. So we might see prices of oil move lower over the near term. And finally, Bitcoin's now in a big pennant formation. Pennant formation is exactly what it sounds like, a giant pennant, as you can see on the chart. Confirmation of that pennant formation comes from the volume declining through the trend. Now, let me educate you. What happens is we're now near the apex of the pennant. And the problem is that breakouts from the apex are not very reliable. Let me give an example. We could see this breakout now above the downtrend line and then do what's called an end around. And that's where it pops up and then actually starts to go down and goes around the end or the apex of the pennant formation itself. Now, rewind what I just said and go over it, because I just taught you something very, very powerful, and it does apply to this particular formation. Generally speaking, we want to follow the breakout either up or down, but because we're near the apex, we have to worry about the end around. All right, thanks, freebies. Love having you here. Hopefully we'll see you next week. Fully paid up members, hang on just 1 second. And freebies, if you're not a fully paid up member, what's wrong with you? Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.